My people, may pips be upon you. We're going to take a hard look at this gold, gold finger. That's what we're going to do. We're going to do it right now. Let's get this up here. All right. First, let's take a grand look at this market on the monthly. This is all the data I have. All right. All right. And we can see we made higher high, made a higher low after a retracement, a higher high, breaking the high of 2011. All right. I think this was made in September. Yeah. September of 2011. We broke that high to the upside and we have retraced. And what I need you to make a note of is the structure: higher high, higher low, higher high after a retracement. We should be expecting a higher low, correct? Well, that's exactly what it did. And you might say, well, it didn't come back as far as it did over here. Well, that doesn't matter. All right. What matters is impulse and correction. If you use your Fibonacci from the last impulse, which was here, the beginning of this impulse, we can see that price did retrace to the 618 Fibonacci retracement, almost to the pip. This is a very significant retracement. And you can see that we double bottomed here. That's not bad. That's not a bad thing at all. I take every double bottom in an uptrend. Not so much in the downtrend, but in an uptrend, a double bottom, yeah, you take that. You take those trades. All right. So that having been said, this was the monthly order block formed here, and it was not violated. This was a news candle. I believe that was CPI. It was not in NFP, I don't believe. I believe this was CPI news data. And it was not violated. Sought all of this liquidity down here, but not past this point. That's significant. From here, price went up, retraced, did not go lower, failed to go any lower, and went higher. All right, making what? A higher low. And what are we on our way to do? Naturally, we would expect a higher high to be made, right? Let's go to the weekly. I want to draw your attention to a couple of points. One, price didn't go below this point here, not preserving uh, the bullish supply. Demand zone, right? Preserving this bullish order block. All right, we know there are buyer orders here, and buyers are in control because it has not come back down here to violate that point. And this is a whole number as well, 1680. 000. So uh, the banks don't want prices down here. This was the discount. All right, this was the discount price for them. Now we're in. Now they're in longs and they're in profit. Right. Also, where was the last break of structure? We always have to ask that question. All right. Well, on this time frame, we see that price made this high, made the higher low, made this swing low because it's not a higher low because it didn't make a higher high. We've been moving a little sideways other than the news candle here, which I take with a grain of salt. Okay. We came lower past the open and close. The close and open here. And price transitioned at this monthly order block. You can see I marked the what do you call the inverted head and shoulders. It shows price transition from bearish to bullish momentum. Okay, we don't need to see that. That's a different point I'll bring up later. All right. Now, from on this time frame, what we want to make sure we have is the floor and the ceiling. I have the weekly order block that price came up and tested multiple times now. All right, we haven't violated it yet, but the more times an order block is tested, the more time supply, this is a supply zone, is tested, the weaker it gets until it's violated, and all the selling orders are used up, and we're on our way to buy. We're on our way to see higher buy side liquidity. Okay, so prices made the transition here, and we've gone higher, breaking that high and getting this high here. Okay, so the momentum is to the upside. All right, and what we're looking at is short-term highs being broken here. Okay, um, I like to look for two candle pullbacks. So when it comes to higher highs and higher lows, I like to see at least two candles. So right now we're in the middle of of a trading range, all right, and the range is always between the lower high and the lower low, or the higher low and the higher high. You understand? And until price goes past this point, that's when we'll know that the bearish momentum is continued, or until it breaks the lower high, then we know that price will has shifted from bullish to bearish. All right, so we need to dive deeper into this, but I want you to also acknowledge that there is a key level of support and resistance here that price seems to like to frequent. We see it as support here, support here. You see the open and close, the open and closes and whatnot here. We have the support here, here, here. All right. When it passes through, it comes back, and taps it as support. Passes through, comes back. What does it do? Close there, right, and open there, and here. Well, it becomes a little more obvious on the daily. You can see it over here as well. So this is a likely turning point. I just want you to bear that in mind as we go to this daily. All right. First question I want to ask: what is the last break of structure on the daily? The last break of structure is here. All right. You can see that price made lower low, lower high, lower low, this lower low here, and then we broke structure, broke that lower high here. We see that price transitioned here from this low, lower, higher. Inverted head and shoulders. We can see that price came back and created a daily order block here. Okay. After the break of structure, what do we expect? A return to impulse. It came back right back to the impulsing order block, which is on that right shoulder. All right. And we continued higher. So what did it do? Structure wise, it made a higher low. It made a higher low, and we then went on to make the higher high. We marked what turned price around, this daily order block up here, right? And what do we expect after a break of structure to the upside? This was the last break of structure. We expect a return to impulse. And I marked the daily order block that is on top of the previous impulsing order block. All right. And I'm believing that because price left this area the way it did, left this order block the way it did, I'm thinking that this will be the potential spot that price will return to and reverse. Okay. Gold is strong. Gold is it's gaining strength. It was quite weak, ranging, whatever, but we had quite a drop, right? And then during the week, we saw it start to gain strength again. And not during the week, during the month, excuse me, we saw that it start to gain strength again. And after it makes a higher low, we're expecting a higher high. That's exactly what it made. And we're expecting what now? A higher low to be made. This is where I'm going to be looking for price to take a buy. Now that this will be my POI bear in mind, like I said, that key level. You see how obvious it is here as resistance passes through, comes back, resistance passes through, support, support, resistance again. What would stop it? What would stop it from doing this? So this will be one of the spots. This will be one of the areas that I'm going to be looking for price to transition. Why did it disappear? Why is this embarrassing me? All right, I'm going to look here, but this will be the area I'm going to be looking for that return to impulse, right? But I'm going to keep my eye on that key level because it has shown some strength to turn price around, to support it, especially as support. So I'm going to look there. This is my goal, but this is where I'm going to keep my eye on that one. Let's go to the 4-hour just to have a peek. All right. Can you see how price obviously broke structure here? And we're waiting for this return to impulse. Look how long price has spent time here. So this is an order block. It's a bullish one. And I'm going to keep my eye on it. All right. A 4-hour bullish order block. Now that's not as strong as where price is coming from. This daily order block up here. All right. So it might pass through this thing. But because there's a key level here and the history of that key level, I'm going to keep my eye on this level. See how it wicked here and then went back up and rejected? We're going to see. We're going to see if that happens again. Otherwise, I'll just be waiting here. I'll just be waiting down here for price to come on down and do its thing. Return to impulse so that I can take that higher low trade and swing it possibly to the upside, because I do expect more gold strength this week. It may start off weak as USD starts off strong at the very beginning. Sunday, Monday is market maker mischief day, and those are the days where market makers will seek liquidity. It may come past these liquidity points for liquidity just to just for the purpose of gaining enough orders to take the more significant move up. Okay, so that's it. I hope that you benefited from this video, this analysis. If you have, make sure you drop me a comment. I would love to hear some feedback, especially requests for analysis or questions. All right. Make sure you drop a like to encourage me to continue to give out this free information, this free education, and I'm hoping that you appreciate what I'm doing. And that the likes show me whether how much you appreciate it or not. All right. um, and make sure you subscribe to my channel to get further updates. Hey, be careful out there. All right. I'll see you in the next video.